pushed up into the top of the implied move after pushing into the bottom of the implied move yesterday. And I would just say things remain fairly range bound. We do have a bit of a head and shoulders going on here. However, there seems to be some support in the 40-50 range, keeping things elevated into tomorrow, where risk will pick up, commencing with Jerome Powell's speech in the early morning. That should keep things slightly elevated overnight, but we might see some mean reversion in index futures. Dollar's still climbing, pulled back from its peak today, but up overall, and we see rates at the front end of the curve going up a little bit, possibly a little bit of de-risking. We've got short-term correlation up, along with 3-month correlation, not quite so much. Both of those pushing back, missing yesterday's highs, but or yesterday's lows, but still pretty low. So in and out of the dispersion trade. After a slight bit of risk off, commodities up again. Gold up like 150 points, silver up 250, regaining ground from its losses yesterday. Copper pretty flat on the day, down 19 points, 20 points, and oil continuing to push up alongside the dollar. We see a little bit of movement in bond volatility, but flat yesterday. Leverage on the top end of the carry trade pushing up to about 8.9. The short end around 6.5. Forward yield on volatility dropped a bit today, down to a -8%, but still kind of maintaining that trend of out of the money put demand. Skew popped up a little bit, with probably some puts taking profits yesterday. 45% of the S&P still below its 20-day moving average. So we're still seeing a lot of concentration in tech, holding us up here. Not too much of a change in Fed fund futures. We've got really not too much in the 10-2. We see correlation between VX and Cashfix moving up to -28%. Another big step towards positive correlation. As correlation starts to move more positive, we may see more demand in long volatility. Leverage day over day, pretty flat. Another test near the all-time high. We pushed up a little bit more today. I think 67.55, 64, but not making a lot of gains on the upside here. So still quite a lot of sellers to be found, even if we do have support at the lower levels. So yeah, I mean, I could see this continuing to get rejected, and staying range bound until we get some actual news that shifts expectations, which maybe tomorrow, might be Friday, might be next week. The government shutdown, we obviously have a lot less data points that are capable of moving things around. After tech sell-off yesterday, we see money flooding back there, but money pulling out of financials, consumer non-durables, consumer services, and health technology. A lot of this just starting to look like a pickup in dispersion moving into earnings, especially for producer manufacturing, tech services, and electronic tech, where I would imagine revenues are expected to be highest, or at least beats. I do think that this dispersion and the anticipation of volatility going higher into this earnings season might be a little bit premature, and I think component volatility versus index volatility is a bit too high right now, and I could see the dispersion trade getting massively overloaded very, very quickly if participants continue to push into this, which would mean there'll be a significant amount of tail risk very near to spot in the markets, which could drive a spike in volatility or a bit of a sell-off, and then everyone will leverage back in before we get to tech earnings. But in the meantime, yeah, it does seem a little bit premature. I think that's about it. Anything else to discuss today? No, not much. So thank you guys for tuning in. See you bright and early tomorrow. Have a good one. Later.